Prime XPT is the most powerful trading platform offering immediate access to over 30 assets. Trade cryptocurrencies, forex, commodities, stock indices, and much more, all from a single Bitcoin settled account. Visit the link below and start trading on Prime XPT in minutes.
Birb Network is an interoperable DeFi ecosystem offering token pre-sales, staking as a service, project incubation, and much more. Visit thebirbnest.com/Birb. Globe is an upcoming crypto derivatives exchange offering up to 100 times leverage on crypto and DeFi perpetual contracts. Sign up for early rewards at thebirbnest.com/Globe. Radix is the first Layer 1 protocol built specifically to serve DeFi. More information at thebirbnest.com/Radix. YFDAI is democratizing finance by creating the most secure, transparent, and user-friendly ecosystem of DeFi products. To learn more, visit thebirbnest.com/YFDAI.
Okay, everybody, it's Birb here, agent speaking, and I'm very happy to be having this very special episode, this very special period to be shared with you for our virtual Congress, 14-day free trading Congress, coming slowly to an end with today's session. This is the pre-final session of today's Congress. I mean, of the entire 14-day free trading Congress. So again, I'm very excited to host this one for you, because today I want to talk to you about my 10 rules for how you can recover the biggest trading losses, the biggest trading mistakes, biggest struggles that you guys are currently having. This is a question that Bitcoin has been, just printing quite ugly price action in the past days, ever since Elon Musk stated that Tesla would suspend accepting cryptocurrency payments for now at least. Okay, they never openly admitted they sold the entire stack or something, but it still definitely had some negative bearish impact on the markets. What does not help definitely is the military conflict arising between Israel and Palestine. So there's a lot of fun, a lot of bearishness going on. Lots of this uncertainty, many big liquidations. I think I saw on Huobi on the liquidations, kind of like a scanner or whatever. That there was one liquidation, like a biggest one-time liquidation, as far as I'm concerned, that was about $90 million. Okay, so somebody got liquidated on futures for $90 million. So that is quite a lot. Okay, right now I'm personally sitting on a dip versus my portfolio performance. Since the last, I don't know, like 5 days ago, I'm down like 600,000, perhaps 500,000. I don't know. Like all things concerned, because I have my short-term portfolio, I have my medium-term portfolio, I have my long-term holdings, So I'm also kind of like diversified in the process of diversifying between other asset classes, which is gold, silver. Many people are laughing because I actually topped out the market and then bought my Audi R7, for whenever the market peaked. So that is quite a lot going on, if you will, right? If we have a look of we can actually just go and then screenshot that right away. Let's actually just keep it. Okay, you should be able to see my screen right now. Now we are looking at quite an ugly price action. Okay, just recorded the Bitcoin report, in the written form, and the video report. But what we're looking at right now is, in general, the past couple of months, ever since mid-February, we were seeing, this kind of like price action trading in an ugly range, in an ugly, very volatile range, okay, between $43,000 and then $65,000. Right now, of course, this candle is looking very scary to many traders, because it's not closed yet, right? So you can never know when it's going to close for real. Same way it was looking, for this prior candle, but it closed in a beautiful hammer. So the kind of like we have to understand that we should wait as traders at least until the day ends in this very context, okay? Because the fact that, whatever happens in here, in case it still manages to close and climb above the range lows, this is pretty much like going to be more bullish, than bearish itself. But this entire period of the past 3 months of this, okay, has not been really bearish per se. It's been just neutral, and that is even worse, perhaps, because the market being neutral, the market being horizontal sideways, means it's completely clueless. It's just as shitty and as bad looking as it can get. Okay, it's not a bear market. It's just dull and boring sideways. Okay, so that is something that we have to understand and accept. And I want to just give you kind of like a recipe that I use personally on how I'm going to approach this, on my tips on what I do, and what you can do, and to apply it on your end to actually just somehow make it back, because definitely not everything is lost, right? And if you're still in the game, even if you lost, even if you liquidated, there's still hope for you. Okay, so shall we go and I start with my first rule that I would like to introduce to you about how you can start improving and making up. So we have to understand that as traders, we are going to witness losses. We're going to experience a lot of losses. Right now, as I said, I'm down like 600,000 or more even since the last week. And again, that's not even a technical, I would say, loss, because I'm still in some insane profit of this entire bull market. But it's definitely a drawdown, right? It's definitely a drawdown since, again, the peak performance for my portfolio last week, let's say, when everything was pretty much like smooth. And what you guys have to understand is that this is something natural. Okay, the more your portfolio grows, the bigger the volatility nominally would be for you. Okay, I had to learn how to live with portfolio going up $100,000 in a day, or $200,000 in a day, or $600,000 in a week, or something like this. Okay, that's something that you have to like accept as a trader, this type of volatility. And the bigger the volatility is going to be, or actually the higher up in the market stage cycle we are, the bigger the volatility is going to be, right? And we are going to see so much bigger the candles, like so many bigger candles coming up, in the following days, weeks, and months. Early this year, I think it was in January, I was talking about $10,000-$20,000 candles. Nobody believed me. Right now, we are looking at $10,000 candles quite regularly in the past weeks, in the past months, if you will. Okay, since February. But step number one, the rule number one I want to talk to you about is, again, accepting and understanding that losses are part of the game. Okay, you may see some fake gurus, sharing that they never lose, that they have 100% win rate, that it's impossible that they ever lose, right? That they found that this new hacked system that is going to keep you profitable 100% of the time. It's all bullshit. It's all impossible. Okay, losses are part of your game. This is part of your statistical performance. Okay, so understanding that those losses, whatever happens to you, it's impossible to keep winning endlessly and continuously. Okay, your portfolio, as a matter of fact, it just oscillates. Okay, it just oscillates. And for everybody to understand, again, oscillations are like this, sine curves, are like the sine movements. Okay, you see ups and downs. I can actually just, again, do some screen sharing very quick for you. Okay, these oscillations, I'm talking about this, okay? This is all, going up and down. It's not that it will keep going down forever. It's keep going up forever, okay? Instead, these are all kind of like cycles. There is an upward part of the cycle and downward part of the cycle, okay? Upward part of the cycle and downward, and so on and so forth, okay? So again, understanding that the market and your portfolio can go up and down is a very important point. And you would be very surprised to see and understand that people usually think that it's just only one-way ticket. That whenever they enter crypto, at some stage, especially usually late, that they will only see wins, and they never understand, they never learn how to deal with the losses. So again, accepting the part that the factor of losses to your entire game is essential. Okay, I'm going to, of course, just bring many examples as we go and as we proceed. And there is this quite a good read file that I did the other day that I would like to share with you later on. But I definitely want to talk about risk management as the second part. Okay, 2 out of 10 is the risk management. And to be able to talk about risk management, okay, and that's what I can actually just scream it to you guys. To be able to talk about risk management, I think we have to understand what the risk firstly is. Okay, to talk about TA, about technical analysis, you have to, well, understand what the technical analysis is. You need to be able to define it. Okay, so just like it states here, risk is a situation that involves exposure to danger. Okay, it doesn't mean it's bad. It doesn't mean it's good either. It means that this is a situation which involves exposure to danger. You expose yourself to danger. And in the financial terms, we're talking about money, of course. Right? So financial risk refers to exposure to danger for your capital, for your money. Okay. Well, here it refers to be specific to the amount of money, to the amount of money that can be lost in the result of a loss trade. Okay, so let's say if you play leverage, which is something that I'm going to comment on later on. If you play leverage, you have to understand that you're playing with borrowed money as well, right? And that this borrowed money is going to increase both the upsides and the downsides for you. Okay, it may happen that you get liquidated, of course. Okay, and then the liquidated amount is your entire risk. So if you put your entire portfolio, which I often see people do, if you put your entire portfolio on leverage, right, then if you get liquidated, which is quite likely, okay, in my career, I get liquidated quite a few times. I usually avoided trading futures for that reasons. Okay, and I'm a big fan of spot right now because my capital itself, when I'm trading with 6-7 figures, my capital itself is a leverage. Okay, and the same 10% movement, downside or upside, upwards and downwards, on $100 position or $100 portfolio is going to give you $10 profit, perhaps, right? Then you have to pay the commission fees and everything, of course, but still. Versus 10% movement, on 1 million or 10 million is going to get you 100 back, 100,000 or 1 million bucks. Okay. So that is the same percentage kind of like just, builds bigger ease and better ease for big money to make more money. Okay. It's easier to make big money when you have big money already. Okay. But then every move you make, costs you or gives you millions of dollars. So that is this effect of scale. Okay, that is giving you the advantage over the others. So if you are a small trader, if you have a small equity, if you have a small portfolio, okay, you would often try to boost your portfolio with the leverage. Okay, that is how it usually works. You don't really often check, what leverage is. You cannot really define that. You just know that you press 10x. Okay, on an exchange, and it does the job for you. Okay, and then you wake up with an email notification about your liquidation. Okay, that's how it usually works, folks, for many of you. I've been there too, back in the day, back in the past, in 2017 early, when the crypto was new for me, the volatility was new. It happened quite, again, not really too many times, because I always avoid it, as I said, playing leverage, but I know how it feels. All right, I know how it feels to lose a lot of money. I know, again, just the moment I'm saying that, and I'm just talking with you, I'm down 600,000 from last week. Okay, but I know there are ways out, and you need to be able to approach it in a let's say grown up manner. Okay, in an adult way, from a trading perspective, from as a major trader. So risk management, long story short, it does refer to the amount of capital that you invest. Okay, as you know, I actually have been scaling out of the markets in the past months. Okay, I have been distributing my profits. Just an example of RS7. The other example of of the apartments that I bought. Real estate, other real estate. The overall gold and silver purchases, which I'm still collecting, and I'm going to be collecting them for the next months, definitely, as I scale out of crypto. Currency deposits, I'm definitely also going to be transitioning slowly to the currencies, and overall the commodities, right? So the key to the risk management and to be able to handle these risks based on your trading strategy. Okay, if you're a day trader, you need to be very strict about your risk management. You cannot really invest more than 1% of your portfolio. Okay, to be put at stake. It doesn't mean you can, as long as stop loss is 1%, you can play with your entire equity then, right? But of course, very often due to liquidity reasons, it's hard to accomplish this way. So let's actually just get it. See, please confirm if you can see still my whatever I share here with you. Make sure, guys, you also subscribe to the channel on our YouTube, so that algos catch it up as well, catching fire, so that it actually boosts our trading content. But I want to also kind of bring back to this point. Okay, so knowing what risk is already, knowing that risk needs to be managed on your trading journey for you as a trader, there are a couple of general points, for how to plan your risk management. Okay, and what to avoid. In general, oversized positions is something that we don't want to have. Over leveraged margin is something that we don't want to have. Okay, entering early or late, okay, is something that we want to avoid. So being able to interpret and understand the trend itself. Okay, lack or misplacement of stop loss. So again, if you're a long-term trader or a position trader, as I am, where I hold and keep my positions, for weeks to months, okay, mainly, then I personally usually don't use stop losses anymore. Okay, what I do use is kind of like a position sizing instead. So my entire position size is risk. So let's say if you want to minimize your losses, and for long-term trades, it usually is something that John Murphy suggests, in the technical Bibles, so that you don't invest more than 5% of your entire equity, or so that you don't invest more than 5% of risk. Okay, which refers to that if you put 5% of your equity into an asset, be it Bitcoin, gold, silver, and this should just goes down to zero at one for some reason, whatever, no reason why, no matter why. Okay, it just goes down to zero. Then the worst you lose out of it is the 5%. Okay, so you can use the stop losses, but also your position size itself can play the role of the stop loss and the risk limiter, if you know what I mean. Okay, no trading system, of course, in place is also part of the bad or risk mismanagement. Picking the wrong trades, okay, which which are more kind of like you want to long something that is more bearish than bullish. Okay, reward to risk ratio. Let's say you have a trade which looks like this. Okay, so well, you can define technical levels for this being the support, okay, and this being the resistance, because that's when the market took the downswing, and that's where it actually just upswing, okay, upwards. So right now, being here in this spot, okay, you have almost the same upside distance as the downside distance. Okay, that is the trade exactly described in here. Okay, this is either equal or lower than 1. Okay, the distance, the return to the risk, right? The risk reward ratio, if you will. Okay, so you have to kind of like have the setups where X is much bigger than Y, and it usually suggest, the CMT, the Chart Market Technician Association, they would suggest that so that you have and choose the trades which are pretty much like for the risk reward. Let's give it an R. Okay, that is bigger. That is definitely not smaller than 3. Okay, so that you have trades which look like this, so that you have not so much downside potential. Okay, let's say this Y, and quite a lot of upside potential. Okay, so in this context, you would have to long somewhere over here. Okay, because if you have a trade which has as same distance to the resistance and to the support, and you take this, then you are a gambler. Okay, you are not really driven by the profits. You're just driven by for the sake of playing it, and that's what gambling is. Okay, so overall understanding that the risk management is important. Okay, there are many ways, like stop losses, as I said, position sizing, having the right trading system in place. Okay, like your business model, how you're going to make money trading. This is something that really matters. Okay, very quick check if everything's still fine. Guys, let me know if you can still see everything is just going fine on your end. Make sure you leave a thumbs up on the video on our YouTube if you enjoy all the entire video sessions that we did so far for you. But moving on, I want to share the next steps. Okay, step number 3 for you is important to be noted. You have to diversify. Part of the risk management as well is for you to diversify over different markets, right? So as I said, if you keep your money in one place, all your life savings in a one shitcoin, right, Doge or even BTC, right, or even any other asset, place, sock, if you have sock full of cash, okay, and that's all your life savings, then somebody can actually walk into your home and rob you out of this money very easily. Same way you can actually get hacked on your portfolio, right? And if you use the MetaMask, or if you are not cautious enough, or if you don't use the two-factor authentication, with Google Authenticator or whatnot, with some hardware wallets. Okay, so again, diversification is something that you have to apply, and that's why you never go long all in into one asset. That's why you never go all in into an asset which is illiquid. I remember the other day, there were cases where I actually, like back at in the day, I had the money, I put it was some small money the other day. I put it into some illiquid shitcoin. There was clearly pump and dump. I didn't know about that, but there was pump and dump going on, and I got left with my sales, with my asks, and nobody wanted that shit from me, So that was quite I think it took about 1 year. Like literally, I think it took like about 1 year until it freed up, the position. I think it actually took 1 year. It was, and as a matter of fact, it was which is even funny. It was quite a good trade because this money was an equivalent of Bitcoin. And Bitcoin increased a lot in value, so I ended up like selling for 8x as far as I'm concerned. That I kind of like completely forgot to just recall that, but it's pretty that is pretty funny. Yeah, but still diversification. Okay, you can learn in many books, in many trading and technical books, that diversification is key element. And no, I cannot recall what the name was. I mean, there was some complete shitcoin. Like, you don't know, it doesn't exist anymore. But diversification means, by definition, a situation or an action of your portfolio which gives you exposure to poorly correlated assets or negatively correlated assets, okay, like bonds and commodities, let's say. And you want to have poorly correlated assets, which means that if one moves, it doesn't impact too much the other, okay? And or when one moves upwards, the other one goes downwards. So kind of like, it smoothens out your portfolio volatility, okay? So those type of assets, like commodities, maybe like bonds, maybe like stocks, okay, some commodities, as I said, for gold and silver, and the other commodities for all the other industries and factor industries, like like the energy sector, right, or the industrial metals, the foods, grains, live cattle, or whatever you name that, okay? So poorly correlated assets, when you see there is a poor correlation or an inverse correlation, like you would see between the interest rates, for example, and the commodities prices, and or the bonds prices, right, and the commodities, like there are many different opposite correlations that would help you diversify in those terms, okay? And so diversification, by having poorly or negatively, this is very important, poorly or negatively correlated assets, is something that keeps you alive as a trader. I'm not talking about crypto diversification. As a matter of fact, if you say you are diversified in crypto, then truly you are not, I think, okay? Because, well, perhaps right now it's tiny bits changed because the dominance of Bitcoin has dropped significantly in the favor of altcoins, but it's still very strongly correlated, okay? Whenever Bitcoin dumps, Ethereum dumps as well. So there is quite a strong correlation, okay? Poor negative correlation would mean that if Bitcoin dumps against USD, then Ethereum stays flat or just goes upwards. That would be poor negative correlation, okay? So those type of assets is you have to select and pick. Fourth rule, the rule number 4 that I want to share with you guys, apart from what I mentioned about like the point number 1 about losses, accepting that losses are part of the game, then about the overall understanding of the risk management and what risk is, about diversification, okay? The fourth rule is so that you don't follow anything or anybody blindly, okay? I'm talking about myself. I'm talking about whatever you guys see in the Nest, or whatever you guys see and go and play on Twitter, right? Or some of your favorite influencers are sharing some stuff. Again, whatever you go and then read it on some fora, right? On some Reddit or again, Twitter, YouTube, whatever. You have to understand that you always need to do your own research. Okay, do your own research, and because whatever applies to me, this type of volatility, again, I'm not sure many of you would be able to handle this easily. 600,000 declines. That's something that I had to learn on how to live with that. So whatever applies to you is not going to apply in the same way to me, and whatever applies to me is not going to apply in the same way, to, for example, somebody who's dealing with parents divorcing or with their own divorces, right? Or with people dealing with some deaths in their families or other sad events. Everybody is a different person, and everybody has their own different life and monetary situation, like life and financial situation. Okay, for one person, $1,000 is the biggest amount they could imagine and ever reach for, and $1,000 for somebody else is some dumb money that is not worth even paying attention to, right? So it all kind of like is different for everybody, and understanding that you cannot follow anybody blindly is elementary, is essential for your feather making up the losses. Okay, and rule number 5 is something that I briefly touched upon. I do suggest you actually, at this stage of the market where the volatility is so intense, so that you avoid futures and leverage. Okay, avoiding futures and leverage has many pros and cons, of course, as anything else in the world. But at this stage of the market, when the volatility is extremely super big, I think it's pretty unwise to trade leverage. Because see, let's say you have when the market is can actually just go ahead here. When the market is freshly after bear market, let's say 80% declines on Bitcoin, something like this is something that you will have to cope with that. Okay, that's why I'm slowly cashing out of this market, because something like that is definitely going to happen. Right now we are looking at 35% drawdown, okay, from the peak, 65 to 42. So it's still a lot, but that's something natural. Okay, but when this volatility here around the bottoms is very depressed, like past 3 months as well, fear, extreme fear on the fear and greed indicator, it's just very dull. It's still high volatility. Okay, so the higher up in the cycle you are, the more volatility you're going to see, and the biggest volatility is going to be at the top. Okay, so we're talking about this small sine kind of like cycles, okay, getting something like this. This insane big volatility is something that is going to actually like make it impossible for most of the traders to ever win by trading futures and leverage. Okay, many people only trade futures because they can apply leverage in there. So futures are derivatives. Those are not, the futures price is not the price of Bitcoin. You need to also understand that. Okay, the futures as a contract is a derivative. Okay, and the price of this is derived from the underlying asset. Okay, so this is dependence, but this is not the same. The futures price of Bitcoin may be different than the futures price than the spot price of Bitcoin. Okay, and there are also like skews, and the deviations. And in this very context, one is backwardation. Okay, whenever the futures is lower than is less expensive than the spot price, and whenever the spot price is less expensive than futures, the futures are more expensive than spot, you can call that a contango, right? So it's named as a factual kind of like a difference. So in this volatility, when the volatility is big, is low, you can somehow trade, place stop losses. The market is not very aggressive, but when it goes like this, okay, it's like impossible. It's like your heart rate, just beeping. When it goes beep, 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 then we go like this, literally. Okay. And when the market is so fast paced, okay, and you would see so big volatility, it's impossible for most of the traders, about 95, my guess is 98% of the all futures traders, to be able to profit from that, because sooner or later, statistically speaking, you're going to get liquidated. Okay, that's how it works on the volatility, and the volatility is always biggest on top. So now wrap up, point number 5 on how you can make it back and then solve your biggest trading losses, okay, is so that you avoid futures and avoid leverage. Okay, so in my opinion, you should stick with the spot market, where you don't have the time limits coming from the futures, and you don't have the liquidation price. Okay, and you can just let it go. You can just let it be. Okay, and be patient. And then if you trade spot, and if you are invested in the right asset in the right point at the right time, then the only factor that you have to apply is the patience, as I mentioned. Okay, so guys, again, quick reminder that you're also able to ask questions in the chats. Okay, feel free to ask as many comments questions as possible. I'll try to answer at least some of them. Okay. Because as we proceed, okay, we have to, as rule number 6, we have to avoid counter trading. We have to avoid revenge trading, okay? And to avoid revenge trading, which is like you lose and you instantly want to make it back. You just want an instant reaction, okay? And this is where it becomes gambling on your case. You just don't care about the risk reward. Just don't care about, whether or not the trade is, like this, this 3, let's say, 3x, right? If you know what I mean for the risk. Okay, so the risk to reward equals, or reward to risk in this context, is equal to 3.0. Okay, so you have 3 times more upsides, okay, than the downsides. And if you just lose, okay, if you lose, let's say you long something on anti-liquidation price and a big leverage, okay, then let's say you get stopped in here. Okay, that's where you get stopped. So what you do is you usually go here, okay, the market drops, and you say, okay, this must be the bottom. Okay, so what you do is you borrow money, or even put your remaining part, you press bigger leverage to make it back faster, okay, and it perhaps recovers tiny bit, and then it clashes all over again, okay, liquidates you all like again. Then what you do even this time is you repeatedly, okay, you increase your leverage, go from 20x to 50x, or from 50x to 100x. You just apply your remaining part of the portfolio, and you're like, okay, do or die, okay, take it all, okay, and that's how you often liquidate yourself to zero. And only after the entire thing happened, only then you can actually realize what you have just done. Okay, so if you have just lost, then the stages that you guys are watching and having are these. Okay, so at first you are in the denial. You're thinking this can't be happening. Okay, this here actually diabetes is not a big deal. There are worse things I could have. Yeah, but you're trying to deny the reality, right? It often happens whenever you find out that some of your relatives, some people that you love have just died. You're saying this cannot be happening. Like, it's impossible. Like, you just cannot believe that. Okay, you're denying the fact. And then the next stage is anger, right? You are just feeling that it is like, why did it fucking happen to me? Like, why couldn't it take my neighbor? Or why, like, they are so unfair? Like, why did this happen to me? Like, how did I deserve that? And that's what comes after the denial, as an anger. Okay, and then you are trying to do the bargaining, as the stage 3 suggests. Okay, and you're kind of like trying to trying to plan some recovery, wishing and regretting the past, because by this time you have already understood your mistake and that it is real. And then what you're left with is this feeling that, okay, like, you're wishing for the past, and because you're wishing for the past and you cannot change that, this leads to the stage 4, which is depression. Okay, and this depression is actually what usually most of the people end up with in the bear market, because they never proceed to the final stage, which is the most important one. And I'm talking about the acceptance. You can only start recovering as soon as you accept the loss. Okay? As soon as you actually realize that those losses occur, okay, that this is your new reality, that this is your new starting point, okay, so as long as you don't accept that, you are never going to recover. You have my word for that. The very start of the recovery starts in here. It's an acceptance, okay, because this lets you get out of this loop. Because if you never accept, you're actually moving to the denial stage all over again. You're in this depression. Okay, you either never leave the depression stage, or you go and proceed to the denial, and each and every single time you actually follow the cycle, it becomes even stronger. and then you're saying like this cannot be happening, it's just fucking impossible. Okay, I mean, it's like, you're just getting more and more angry with that, right? Angrier. You're just getting literally very, very intensified in the cycle every time you follow that. Okay, and this is something about how our human psychology works, how our psychics work, how our brain and mindset works, because we refuse to take responsibility and accept, accept the new reality. And point number 7 as well, okay? Point number 7 out of 10 is so that you don't blame others for that, okay? In terms of losses in trading, because that's the main merit here, you should never blame anybody else. It's not Elon Musk's fault that I'm fucking down 600,000 since last week, right? Or something like this. It's my own fault because I didn't, perhaps apply stop losses, although I don't usually use them, right? Or yada yada. It doesn't matter. It's not anybody else's fault. It's my own fault. Okay, I admit that. It's my own good things, and advantages that in my portfolio goes up 200, 300,000 or 2 million, okay, in the past couple of months. But it's also my own mistake and my own fault that I didn't get out in time, for example, out of the position, that I didn't liquidate enough of my profits, okay? Because perhaps I was just at one point in this year kind of like too lazy for that. I don't know, right? But it doesn't matter. What matters is that this is not relevant. It's not anybody else that is responsible for your money. It's yourself. I'm responsible for my wins, and I'm responsible for my losses. I'm responsible for my weak victories over portfolio going 2 million or 3 million, but I'm also responsible for my portfolio going 500,000-600,000 in the past week. Okay, that thing of accepting the reality and not blaming anybody else, okay, for that is essential for you to be able to make it back. Okay, so as we proceed, again, I'm of course going to share this presentation later on with you because there are still two free points left. But I definitely want to remind you guys so that if you're listening to that, if you're watching that, make sure you actually leave a thumbs up and a kind comment if you feel you can associate with that. If you feel the Bitcoin actually did this harm to you, and you are trying to cope with that right now. So for the sake of further improvements on your path, I'm going to just keep sharing all the streams and videos for free with you to help you and accompany you on your path. But make sure to, if you just enjoy and appreciate it, my fair and honest talk, just please press subscribe to this YouTube channel and leave a thumbs up if you appreciate it, so that our YouTube algos can actually just get it bumping. Moving on, okay, and it's about to get time to get more intriguing for you and bring some points which nobody probably from you expect. Okay, so point number 7 is so that you can only improve and start making it back, okay, after you accept and choose not to blame and understand that this is, you're the only one responsible for loss and wins. But as a stage, or as should I say, as a step 8, as a rule number 8, okay, I want you guys to keep learning and keep improving. Okay, so let's say you had a big win, big win. You don't care about that, right? Because you don't appreciate wins enough. But let's say you lose. Okay, and it's all closed down, liquidated. You're lacking profits, and that's it. Okay, you're just sitting there not knowing what to do. So what you can do, the only positive thing that you can pull out of this very negative situation for you, okay, is so that you realize what can be achieved in a different manner, what can be improved, how you can make sure that this is not going to happen again in future. This is constructive. You're trying to build something out of the ashes. This is building. This is about improving. Okay, so take a book, read a book, and you're going to already be richer in your knowledge than from before the the sad experience. Okay, and how will you make sure so that you don't repeat the same mistakes over and over again? Okay, and after realizing all those points, it's not going to be complete without the final point, rule number 9, about being patient. And you have to be patient. Crypto is a wild west of impatient people. It's the only market in the world in the humankind's history that you would actually expect 3x profits instantly, right? I kept seeing all those comments in the YouTube videos, and actually in my Twitter, literally like people wishing or DMing me like, bro, fucking bro, that just give me 3x. I only need 3x to recover, right? Only give me 3x coin, or give me 10x coin. I need to recover fast, right? So that is not how it works, right? That is really not how it works. Most of the traders on the regular markets, on the traditional markets, would have to wait the entire decades for that. And crypto, because it's kind of like poorly regulated still, okay, it's extremely volatile, and only this market can get you like so insane profits, but it works both ways. Okay, big insane profits come with big insane risks. Risks and returns are dependent from one another. Okay, the bigger the risk, the bigger the win, but also the bigger the loss if you lose, actually. Okay, so you need patience. If you just lost, you have to be patient in your recovery. You have to, again, just take a book, okay, and plan on how you're going to make sure, not only on your financial stuff, on your mindset stuff, how you're going to become a better person, how you're going to become better, at everything related, at work, being better, with your family, with your friends, perhaps telling them that you love them, okay? Being patient is the most important factor in the entire trading. Every single professional trader have been there, through ups and downs, is going to tell you that patience is probably the most important factor ever needed for the successful trader. Okay, this patience, the fact that you have to delay your gratification. Okay, it's like there was this test, I think it was Warren Buffett, right? Or in general, even there are these tests with children in the classroom that they get they sit at a table and they are able to choose whether they get one marshmallow or one gummy bear, right now, or they wait for an hour or so and they get 2. So most of the people just go for an instant gratification and take 1. While in trading, from a performance point of view, from the amount of money that you make, how profitable you are, the delayed gratification is what matters the most. Okay, so the major trader will choose to wait more, but also win more. Okay, let me know if that makes sense so far. Okay, and yeah, guys, this is as we are slowly coming to an end of this session in a couple of minutes. I'm going to just throw a bomb at you right now, but a positive one, something that you are not really expecting, something that is that has helped already many people in the past. Just reading from my comments on Twitter, I shared it also yesterday on Twitter. This very file, this PDF which I'm discussing right now, I'm going to make sure to put that perhaps in the video description. And here, you know what? I'm actually just going to get it here right now. Give me 1 second. I'll just copy paste that for you. Okay, just need to find it. 1 second. 1 second. Come on, there's been so much. Oh, there we go. Right. I'm posting that in here. So feel free to take this link I'm going to post this tweet as well, because that was a tweet, I believe, for that. I think I lost it. No, there you go. Okay. So feel free to actually just dig those. But as I said, I'm right now going to surprise probably many people. But I'm going to be very, very serious and very, very quick in what I want to say. This is not a secret, probably, that I'm a Christian person, and many people who are watching that, many people statistically, first off, don't believe in God, don't believe in demons, in Satan, in any of this. Well, the truth is that, again, my life for me has been a perfect example that it does not only exist, that this is not only true, but that I have been somewhat, in my opinion, led by God, perhaps, but only because I chose to fight always. I never chose to kind of like go for the easy options, in my life, which is exactly what has brought me here, perhaps talking to you right now. But the other day, I made a promise. And I'm a man of my words. People rarely ever realize how strong and powerful the words can be. But I made this promise, actually, to Saint Rita, and that's what I stated. You might be thinking right now, what the fuck is this dude talking about? Okay. But whenever everything that you've done fails, when you feel the most hopeless, helpless, and nothing really helps, there is this experiment that you can make. Okay. And long story short, Saint Rita was a person who lived in the past. It was like just like it states in here, 14th, 15th century. It was many, many years ago. Okay. And she had, long story short, as the records say, quite a tough and rough life. Okay, with her family, with her husband who was beating her, and then she somehow got closer, connected to God, to Jesus, I believe, and ever since, for her being patient, okay, patient and trustful, full of trust towards the God's plan, she was she became somehow a symbol. She became a person, a saint, a patron, okay, of abused and heartbroken, wives, and along with some lost causes. Okay, so whenever something bad happens to you and you're hopeless and you're helpless, that is something that has always worked for me. And not a single time, and I really mean not a single time, okay, it did not work. Always worked. I don't know how it works, okay, but it just simply works. When you're really about to lose it all, when nothing else helps, okay, and when you're feeling you're left all alone and there is nobody to help you out with that, there is this special day coming. Okay, it's called Feast Day. I mean, again, because I'm Polish, I usually pray, of course, in Polish, so it's like a bit different. But the feast day, the day that the memorial, kind of like a day, the memory day for the Saint Rita is 22nd of May, which coincides quite funnily with Bitcoin Pizza Day, if you know what I'm talking about. But this is the anniversary of the date of her death. Okay, and again, if you are about to lose it all, okay, if you are about to lose it all, there is this quite a fast experiment. Okay, and I'm going to read it to you because that's exactly the promise that I did to Saint Rita the other day. Okay, that I would promote and introduce Saint Rita to many people's life. And again, I know you might be surprised. I know this is not something that would seem logical at first, but for me, being a trader, being a person who I am, being CryptoBirb, being Adrian, personally and privately, this is something that I strongly want to recommend. And I'm not going to press anybody. This is just an experiment that you can make. And with all my full belief, I promise you it's going to work. And you can do anything what you want about it, okay, when you disconnect. But it goes like this. O powerful Saint Rita, rightly called Saint of the Impossible, I come to you with a confidence in my great need. You know well my trials, for you yourself were many times burdened in this life. Come to my house, speak for me, pray with me, intercede on my behalf before the Father. I know that God has a most generous heart and that He is the most loving Father. Join our prayers to mine and obtain for me the grace I desire. And here's that you can share your request. Okay, let's say you want to recover your losses. Okay, you say you want to see your family again. You want to see your mother again, who's perhaps suffering right now from COVID. Okay, or that you just simply want to recover mentally, physically, right? You can come with any request that you want into that. And once spoken, you who were so very pleasing to God on earth and are so much more now in heaven, I promise to use this favor when granted to better my life, to proclaim God's mercy, and to make you more widely known and loved. Amen. Right? And there is this close. Saint Rita, pray for us that we will persevere in life despite the trials. Those are words, but words are very powerful. In the same way that people, just have fun and call out demons and Satan at times, and it works, sadly, the same way the prayers and the words are listened and they last. And my life is a perfect example for that. And this very part of this webinar is the promise I made to Saint Rita the other day, a couple of months ago, I promised that if my thoughts, my prayers would be heard, then I would host this exact webinar for that. And they were heard, and that's what I just did. Okay, and again, this is not something that I want to press. Again, I'm not checking the comments. I'm going to just go for that for in a second. But I really hope, guys, that you understand that all those 10 rules, okay, anything that happens, it does depend on you and on your own choice and what you state, what you believe, and what you want to do. Okay, prayers are a form of meditations. Okay, if you want to meditate on that, feel free. Okay, but words have powerful. Words have power, right? Words are very powerful. So again, if you feel you need that, okay, if you feel you could just simply follow that experiment, okay, I promise to you, with all my belief, with all my experience, that it works. And it works 100% of the time for me. I have not a single clue how it works, but it does work. Okay, so if you feel you need help, that everything else failed, okay, feel free to go and follow that words. I'm somehow feeling kind of like a tiny bit stressed, perhaps, talking about it in public, because that's not something that is very popular. That is not something that I ever did before. So I really hope you guys appreciate and associate to some extent with me and with what I'm saying and sharing, because that's kind of like a very private thing, but it does work. Again, it's going to take you a couple of seconds, 30 seconds. Just give it a go. Make a promise. Bet with Saint Rita, if you know what I mean. And my promise is so that you are not going to regret it. Okay? And if you ever need my help, okay, just drop me a DM on Twitter. As always, I'm happy to help and happy to talk. And I'm happy to help you solve your problems and solve your issues. I'm going to do my best to be there for you. Okay, I hope you appreciate it. And yeah, guys, that has been all that I wanted to share with you. I know it's it came with some surprise, but Saint Rita is a special person, in my life. Is a special saint. Again, no matter what religion you are in, you are included. You're not excluded. Okay, I have many people, many friends in Muslims, many friends in in Buddhists and whatnot. Words have powerful message to the world, everybody, and that's the message that I want to leave you with for today. Okay, so stay safe. I really hope you guys enjoyed this. Now make sure you put a thumbs up and a comment if you enjoy that. I'm going to bring the links for you so that you keep those links in the video description as well. And what can I say? This has been the pre-final show of our Congress, and right now I'm inviting you with big thank you for everybody who participated. I'm inviting you to the final show of our virtual 14-day free trading Congress. I love you all, guys. God bless. See you on the Birb Nest YouTube channel on another video right in a second. Cheers. God bless.